Hello everyone, this is Jay Soloff from Investors Alley, and this is our options trade of the week. So we've had 2 down days in a row, and that's the first time it's happened in the market since about a month ago. So let's see what's going on in the options world. And we as always are at Market Chameleon here in the unusual options volume page, looking at some of the major activity. Particularly, I like to sort by volume and look at the bigger names. So one of the big items today, probably the biggest driver of the down move, was Intel, which really butchered earnings. A delay in their next gen chip, potentially exiting the manufacturing business, guided down, so just not good all the way around. And you can see AMD, their main competitor, picked up a lot of the, apparently a lot of people selling Intel decided to put that money into AMD instead. Or just coincidentally, they're up and down almost the identical percentage points. But Intel traded almost 1 million contracts, 10 times normal volume. The interesting thing is that a lot of it was on the call side, which tends to be bullish, although not always. But interesting to see maybe some bargain hunters happening here with Intel. So let's look at the trades in a little bit more depth and see if we can tell it's bargain hunting or if it's something else. We'll pull up the trade list and then we'll sort that by quantity to see what some of the big trades are, which I find the most useful way to see where a lot of the activity is. So first off, in September there was some call buying, but it's in the money call buying, and it's about the same as open interest. So this is probably a closing trade. Someone who was long the calls, and now that Intel dropped back quite a bit, they're closing the trade, taking whatever profits they have. Most likely could be opening trade, but I don't see, we won't know until we see the open interest in the following day. But most likely this is a closing trade. So if we ignore that and we look at the next one, this is interesting. Looks like, since it's tied to stock, buying a put and selling a call, this is known as a collar. The stock is in between the two. So it's more of a protective trade. Now, this one was done for a credit. So that's an interesting trade. That basically means that with the stock about 50, they sold the 55 calls and they used most of the proceeds to buy the 43 puts. So if nothing happens, they earn a credit, which is certainly not bad. But if it goes up, they can make money on the stock all the way up to 55. Now, if it goes down, they'll lose money on the stock past a certain point, but they'll start making money again if it drops below 43, where they have protection. So it's kind of a safe trade, way to generate some credit and protect your stock holdings and potentially collect dividends along the way. So that's an interesting trade. Not really bullish or bearish, slightly more bearish than bullish or neutral, but an interesting trade and not a bad one to make if you're an owner of Intel and you want to hold on to the shares. So let's actually look at that. Here's Intel. It's been kind of hovering between 57.5 and 62.5, and then boom, really bad earnings, down to 50, almost down to where it was after the crash. So be interesting to see if it's a quick rebound, but given the news that they put out, I would imagine we're going to stay at this level, if not go further down. Just very disappointing news if you're an Intel fan or an owner of the stock. But if you are an owner in the stock, you want to protect yourself and potentially earn a credit while you're waiting, that collar is not a bad trade to make. You can see here it is. Here it's done. This is where it was done. The 55 was sold. This is January. So it's about a half year away till expiration, almost exactly. The 43 puts were purchased. So you have some risk if it goes down into this range, but doesn't go further. But if you own the stock, you're all right. That's not that much different than where it was in the previous month, and you're collecting dividends potentially. So, but if you have this trade, ideally, you want it to go up to 55 or above. You collect the credit, you collect the upside, and you have protection on the downside if it does continue to fall. So that's the sort of thing I like to talk about in my bi-weekly chat called Coffee and Condors. So if you want to learn more about these types of strategies, check it out, coffeeandcondors.com.